Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bank of Jiujiang Co Limited annual report. Bank of Jiujiang Co Limited offers a wide range of banking services to various clients. For corporate clients, the bank provides loans, trade financing, deposit products, and other intermediary services such as letters of credit and guarantee. It also offers card and personal wealth management services. In addition to these services, the bank conducts money market or repurchase transactions, financial investments, and domestic and overseas settlements. The company also provides bill acceptance and discounting, government bonds and financial bonds trading, interbank placement, and insurance agency services. Furthermore, Bank of Jiujiang Co. Limited issues financial bonds, sells securities investment funds, and acts as an agent to issue, settle, and underwrite government bonds. It also facilitates on inward and outward payments through its banking services. The bank's comprehensive range of products and services makes it a one-stop solution for all banking needs. The company's services can be broadly categorized into three main segments: corporate banking, retail banking, and financial market business. These segments cater to the diverse needs of individual customers, corporations, government agencies, and financial institutions in China. With its extensive range of products and services, Bank of Jiujiang Co. Limited has established itself as a leading banking institution in the country. The bank's services include corporate loans, personal loans, trade financing, deposit products, card services, personal wealth management, money market or repurchase transactions, financial investments, domestic and overseas settlements, bill acceptance and discounting government bonds, and financial bonds, trading, interbank placement, letters of credit and guarantee, insurance agency, safe box services, financial bond issuance, securities investment funds, sales, government bond underwriting and settlement, inward and outward payments. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in an organization can be attributed to several key factors. Firstly, fee and commission income plays a significant role in determining revenue growth or decline. An increase in this type of income can lead to a surge in revenue, while a decrease can have the opposite effect. Another crucial factor is net interest income, NII, which has been known to increase over time. This increase in NII contributes significantly to revenue growth. Conversely, a decline in corporate loans and advances, retail loans and advances, and financial investments can lead to a decline in revenue. These factors are critical in understanding the dynamics of revenue growth or decline. By analyzing these key drivers, organizations can identify areas for improvement and make informed decisions to boost their revenue. The net income of the company underwent significant fluctuations between 2024 and 2025. Initially, it decreased by -841 million RMB, but later increased by 10.4%, resulting in a positive change of plus RMB 79 million. However, when considering year-on-year changes, the net income actually decreased by 10.8% due to a significant drop of RMB 2,072 million. The profit margins also experienced variations during this period. The net interest margin and net fee and commission income to operating income both showed decreases, while the operating income margin dropped from 99.6% to 98.8%. On the other hand, the net profit margin increased from 96.2% to 97.3%. A closer look at the profit margins by business segment reveals contrasting trends. The corporate banking segment saw an increase in profit margins from 61.9% to 65.1%, whereas the retail banking segment experienced a decline from 25.5% to 23.8%. These changes suggest that the company's performance varied across different segments, with some areas showing improvement while others faced challenges. The company's financial performance indicates a significant issue in its ability to generate positive operating cash flow. According to the provided data, both 2025 and 2024 have shown negative operating cash flows, with values of 3,169,443 RMB and 24,078,585 RMB respectively. This trend suggests that the company is struggling to manage its expenses and maintain a stable financial position. As a result, it appears that the company is not generating positive operating cash flow. The company's debt level has undergone some changes in recent years. While total debt has increased by 10.3%, long-term debt has actually decreased by 2.7%. However, short-term debt has seen a significant increase of 7.8%. On the other hand, interest expenses have taken a notable dip, decreasing by 14.7% from $10,041,235 to $8,541,246. A closer look at the interest expense breakdown reveals that external interest expense has also decreased by $1,627,966, while accrued interest on deposits from banks and other financial institutions has plummeted by 85.1%. These significant reductions in interest expenses suggest a more favorable financial situation for the company. Overall, the data indicates that the company's debt level has increased slightly, but its interest expenses have decreased substantially. The recent financial performance of a company has been analyzed, revealing both positive and negative trends across different regions. The China region stood out as a strong performer, with revenue increasing by 10% and operating profit rising by 12%. This growth is a testament to the region's resilience and potential for future expansion. On the other hand, the international region struggled, experiencing declines in both revenue and operating profit. Revenue decreased by 5%, while operating profit dropped by 8%. These disappointing results highlight the challenges faced by this region, which may require targeted strategies to improve performance. Management is optimistic about the company's future prospects. The bank has made significant strides towards high-quality development, achieving a net profit increase of 10.4% and maintaining its market positioning in serving local economies, small and medium-sized enterprises, and urban and rural residents. In terms of strategy, management aims to maintain stability in net interest income while decreasing the average yield of interest-earning assets. The bank also seeks to diversify its financial investments across different asset classes. Additionally, it plans to focus on key areas for high-quality development of the real economy, increase lending to small and micro enterprises, and expand its customer base. The company's priorities include optimizing business structure, deepening scenario ecosystem, and strengthening technological risk control. Management also emphasizes the importance of asset quality control, credit allocation to the real economy, and advancing the 5 priorities. Furthermore, it aims to enhance market transparency, improve anti-money laundering capabilities, and strengthen risk management and reporting obligations. Management is cautious about loans and advances to customers, but sees an increase in interest income from deposits with banks and other financial institutions. The company's outlook is positive due to maintaining a stable net profit despite fluctuations in interest income and expenses. Its goals include increasing net interest income, growing fee and commission income, expanding operating income, reducing impairment losses on assets, and investing in non-current assets. The bank also has a strategy of expanding its operations through mergers and acquisitions, which is expected to contribute to its growth prospects. Overall, management's outlook is positive, with a focus on maintaining stability, diversifying investments, and expanding operations to drive future growth. The company has made several strategic acquisitions in recent years to expand its operations and presence in the market. The 3 notable acquisitions include Lushan Jiujiang Art County Bank Co., Limited, Jinggangshan Jiujiang County Bank LLC, and Nanchang Changdong Jiujiang County Bank Co., Limited. These acquisitions are likely aimed at increasing the company's customer base, improving its financial performance, and enhancing its market share. The company has not made any divestitures, indicating that it is focused on growing its business through strategic acquisitions rather than selling off existing assets. This approach suggests a long-term commitment to expansion and growth, with a focus on building a strong and sustainable presence in the market. The company has a history of paying dividends to its shareholders. In 2024, the final dividend was paid at a rate of RMB 0.57 per 10 shares, resulting in a total payout of RMB 162.3 million. This demonstrates the company's commitment to returning value to its investors. Looking ahead to 2025, the company has proposed a cash dividend of RMB 0.56 per 10 shares, which is slightly lower than the previous year, but still indicates a continued focus on shareholder returns. The total payout for 2025 is estimated to be approximately RMB 159.45 million. That concludes the financial summary for Bank of Jiujiang Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.